Hello, everyone. Welcome to Live Trading Thursday. My name is David Verbruggen. I am happy to be back with you. I missed you guys last week. I had to travel for Trade Search. It was a great event, but I'm glad to be back with you now. We've had some fun stuff going on in the market, so we're going to take a look at that in just a second. Guys, you know the drill, right? We're going to go ahead and just start loading up some tickers, right? If you've got questions, you've got stocks you want to look at, trades you want to look at that you're in, that you were in, whatever the case, go ahead and throw those in the comment box, and we're going to start knocking those out. Keep in mind that all the examples that we're going to look at in this live trading session should be viewed for educational purposes only and not taken as trading or investment advice. All right, guys, I'm going to share my screen with you here. There we go. Got the S&P. Look at this bullish run, right? Last few weeks, it's been pretty intense, right? A lot of big moves up, and that brings a lot of questions. Are we still in the bear? Is the bear over? What's going on? Well, here's the thing, right? You know me, I like to zoom out and just get the big picture. Here's this very solid downtrending resistance line that definitely very clearly was broken. There's no doubt about that anymore. Before, a few times on some of these days here, you kind of adjust the line, see, is that broken? Even with a few days of a move up here, was that an anomaly? Well, you know what? We broke through that. You came up on this other line here, and that line could be looked at as here or here, whichever case. It closed at that line yesterday. There we go. And then it gapped up today and has moved up since. So we broke the downtrending resistance line. We've broken this horizontal resistance line. In fact, where we are today is almost exactly 20% up from the very low down here, October 13th. So, that, of course, is going to bring questions again. Is the bear over? That's a tough one to answer, but here's what I will say. In the short term, at least, we can be looking for bullish trades. That makes sense. We've had higher highs, higher lows. We've broken resistance a couple times. It would not make sense in this kind of a market right now to be bearish in the short term. Now, even if we're bullish right now, we need to be cautious. There's still many people that do not believe this whole downward movement is over. It absolutely could still roll around, guys. You could still move up quite a bit more and then roll around and even go make a lower low. That absolutely could happen. So with all that being said, for now, we can look at bullish trades cautiously, but just keep in mind that things could turn around pretty quickly. All right, guys, I already see several of you in here. Thank you, Ralph, Barney, Joseph, for being on, participating. Love it. Joseph says, yeah, just don't know. We have a new resistance. You can see hitting that and caving back to 3,800, 3,700. Yeah, I mean, we've got, let's zoom out a little again. We've got other resistance coming up here. This level right around 4,200. Potentially we even hit that today. That'd be a really big day, but that's some resistance to keep in mind. If we go above that, 4,300, it's like when it came down, it would pick every $100 level, or 100-point level, I should say, and make a new pivot. So there's several areas, and then if it rolls around, we could be going back down to 38, 37, somewhere in this area. I see that, Joseph. It very well could happen. Marty's saying hard to find a trade that isn't already far from a good buy point. Yes, that is true. That is true. Most of the stocks you're going to look at, it might be like, well, that's already, too far gone. You got to wait for that to come back and bounce again. That's going to happen when you're up against resistance and then it breaks out in a strong, confident way. All of a sudden that breakout happens. You're like, man, I wish I was in. Well, you shouldn't have been, because we don't buy at resistance, right? And now it's too far gone, and now you just got to wait for it to come back. We also had the Fed meeting yesterday. That was a big deal. The Fed meeting can go any which direction. It went up because even though they raised the interest rates, that was what was expected. So there wasn't any curveballs thrown. And so that's what was expected. That's why the market went up. All right, Ralph wants to look at Goog. Let's take a look. Let's start off with Goog. If you guys got any other tickers you want to throw in there, go ahead and put them in. Wow, look at that move. Okay, we had earnings. We don't have the data in yet, but earnings that was today. Probably was this morning, so the data probably hasn't populated yet. We could put, let's throw some lines on here. You can see a little bit of a resist. Ooh, I think it goes back farther. Look at that. That's a solid resistance line right there. Okay, I just like to have that on the chart. That could come into play in the future. And obviously we had a big gap up on the earnings news, whatever that was. Must have been pretty positive, either in the from what happened last quarter or the forecast. So there you go. But the question now is, what do you do with this? Right, that's a big move up. That's a gap that's pretty far extended. There are strategies, I should say, at Tradeway that we teach how to deal with this kind of a move right here. Right, there are strategies that we teach how to deal with that, but a lot of our basic strategies aren't going to be able to handle this. Let's throw another line on here. You got an uptrending line. It's actually a pretty decent line there. 1, 2, 3. So you could wait and see if this thing comes back. I wouldn't just go hop into Goog with, without a specific strategy in mind, just because, hey, it moved up a ton. Also, with earnings having just happened, there's still going to be a lot of volatility. You can see it moved up quite a bit. It's already retraced a bit as well. By the end of today, this could be a down candlestick. So, and if that happens, and that first strategy I talked to you about probably wouldn't even apply. So, Jody says good earnings are just after close today. Oh, okay. So Jody's saying that the Goog earnings haven't even happened yet. Maybe that's later on today. Interesting that they have a big gap up. I mean, the market did gap. The market gapped, right? Well, if that's the case, where earnings are actually at the end of today, then we definitely wouldn't be able to look at trading this right now. We want to wait for earnings to get behind us. We don't want to be in a short-term trade over earnings. That can be tough. All right, that was a good one to bring up, guys. Go ahead and throw some more in there if you want to look at those. In the meantime, I'm going to show you a way. Okay, let's look at Meta. Jody wants to look at Meta. Let's take a look at that. Here we go. Taking a look at Meta. Another one. Look at that. That earnings was yesterday. Got some information. Look at that, guys. So the estimate for earnings was $2.12 per share. The actual was $1.76. You can see it filled it in as a solid red, not the highlighted red. It's that solid red, so that means they missed by a lot. Not by a little bit, by a lot. Last time they missed by a lot, there's this massive gap down from about $130 a share to just below 100. So you're looking at, about a 30% decrease overnight on earnings. This time we got bad earnings report and they gapped way up. That's not a small move. 153, they gapped up to 182. Again, it's probably 25% move or so, somewhere in there, and then up more at the moment. So again, that first strategy comes to mind again. Putting a line on here is going to be tough. I mean, maybe get from back here. No, that's just, it's going to be a tough one to get a good line on here with a big move like what it made today. We could throw that line on there for the future, maybe. But Meta making a big move on battery. So maybe their forecast was good. Maybe that's what the deal was there. All right, Dan wants to look at Beam. Let's take a look at Beam. And guys, on these two, if you have a specific trade in mind, feel free to put some details in there. Maybe you're looking at a bull put spread. Maybe you're looking at this or that, So go ahead and put those details in there for better analyzation if you'd like. Beam, nice move up. Let's get some lines on this guy. So there's been a lot of downtrending action. That right there is probably pretty close to a good line. And then today, confidently breaking out of that downtrending resistance line. Okay. This low right here was slightly higher than the previous low, breaking out now. You do have earnings coming up in just about 3.5 weeks. So that's something to keep in mind as well. get another line right about there. So that's kind of what I'm looking at on the chart. You can see how this was in a wedge type of a situation. Broke out on higher volume. And now we got to wait and see what this thing's going to do, right? It's hard to buy right now. It's hard to buy right now. So pulling back and looking for a bounce, that would be the ideal, what we'd be looking for on Beam. All right, Joseph is saying they fired 10% of staff. Talking about Meta. Wow. Okay. Okay. Let's take a look at that. So even though their earnings are bad, when an investor is hearing that, hey, they slashed 10% of the staff, so the overhead is going to decrease quite a bit. Therefore, the earnings should be better because, if they're still going to bring in the same revenue, but the expenses went down, then the earnings should be better next time. So it's kind of a cold game, right? Hey, 10% of our entire staff, and they're thousands big, thousands. 10% of our entire staff lost their job. Yay, all right, here we go. We're up 25, 30%. That's pretty cold. It's just the market. It's just how it works, right? They're looking at projections and they're looking at what are the numbers, what are they going to be most likely, and how can we position ourselves better. So with that actually for the market is good news. And then you get this big gap up on higher volume. So that makes sense, Joseph, that with what you said there. So thanks for adding that in. All right, guys, great. I love all the interaction. Let's take a quick look at one of the ways that I want to show you that we can look for trades. Now that we're like, okay, we're in an uptrend on the short term, at least, right? I'm not saying that this whole recession bear deal is completely over right now, but in the short term, or at least an uptrend, if we want to look for uptrending stocks, how can we use a platform to aid us in this? Let's go ahead and let's go to our Find tab and Scans. These scans are built in for us, and I like to just go to the Outlook. You can see the different tabs up here. Outlook is just, that keeps it nice and simple, right? Bullish, bearish, stagnant, or volatile. And so you can pick strategies based off of that. So we're going to look at the bullish ones, and you can see there's all these different scans that are in here. Now there's a lot. This can be overwhelming. I'm going to give you just one I want you to look at. I want you to look at chart pattern rising channel. Okay, now another way of saying that is just uptrend, right? We've got our support line and our resistance line. They're just moving up in a rising channel. Okay, so we're going to click on that, and here we've got all these stocks in here, and you can see some information with them as well. I want to maybe just quickly order them based off of earnings dates or days to earnings. If it has a 0 next to it, that just means that the next earning date hasn't been announced. All right, that means it's far enough away. Like Baba right here, that's 22 days. That ZTS 13 days. But if it's 0, it's far enough away. We're going to have no trouble getting into a trade, and we don't have to worry about earnings. So I can click on that, and it's going to order it. I can do the opposite, and you can see that there as well. So now all the zeros are kind of on top. And I want to go ahead and select them all. So I just click the select button symbol, and that just highlights them all. All of them are now highlighted. That's what I want. And I'm going to hit the little plus sign on the folder. This is going to allow me to instantaneously put all of these in a brand new watch list. So, oops, if I can type uptrends down here at the bottom, I'm going to label it. I'm just going to label it simply uptrends right now. You could call it whatever you want. And they're all pre-populated in there. And then I'm going to create new. Now, if you look at your watch tab, you come to uptrends and they're all in there. This is that watch list we just created. And if you remember, of course, we can now also look at the watch list right next to the chart. So I'm going to pull up the watch list, and here's our watch list next to the chart. And remember, the top several, the top several don't have earnings that they have to worry about for a while. Those have already happened. We are in earnings season, and so it's something to keep in mind of. But now we can go ahead and take a look at this. Okay, just big picture overview, right? I want to look for pretty patterns, ones that are going to help me the best. And I can get rid of ones that I don't like. We can just discard them out of our watch list. the scans, that's a mathematical thing that pulls up and then it puts it in there. But we still need the human touch, right? The human eye to look at it and see, well, which ones are pretty. All right. So all these match the mathematical formulas, but which ones are pretty? That's what our job is as traders. Now we're looking at JP Morgan, and I see it moved up pretty, kind of like a rocket here, right? It launched, but lately just kind of flattened out. So not as excited about that. I might leave that on the list, but I'm going to go ahead and move on. TMO. TMO's a little bit all over the place here. We can maybe get a line on here. Something like that. Potentially. I mean, you've got 1, 2, 3, 4, close to 5 touches there. It's extended. So again, you could leave it on the list, but I'm going to move on. Boeing. Ooh. Take a look at Boeing, guys. Yeah, Boeing has some similar features to JP Morgan where it's kind of flattening out, but still moving up decently. And what I love is how consistently it has stayed above the 20-day. That is my solid white line here. The last time that it was closed below the 20-day was this guy right here. That was an earnings day, in fact, in October 26th. So for a while now, it's been moving up very consistently. You can actually see a previous bull put spread that we looked at either in this webinar or the live trading hour. And if the student took that trade, it worked out well for them. They could have taken a max profit on that bull put spread. So here's like, okay, what can we do with this? Well, we could do a very similar idea where we do a nice bull put spread and maybe a 205 by 200 and the short strikes below the 20. Again, Boeing has been above the 20-day for over 100 days now. Okay, that doesn't mean it can't turn around, and it absolutely will turn around at some point. All right. If anyone knows, Boeing should know what goes up has to come down, right? Okay. So, but that maybe we go ahead and get a really conservative one and we do 195 by 190 a month out. Let's build that real quick. We might go a little long here. That's okay. I'm excited. Let's go a month out. We'll do, well, it might be a little month and change. We'll do Friday, March 17th. Let's see if this works. I said 195 by 190. Take a look at that. Here on the risk graph, we have the potential of making $67 for every 433 risked. Okay. Those are pretty decent numbers. Let me get the calculator out. 67 by 433, 15.5% max ROI. Hey, that's kind of at Treyway, what we like to see as kind of like a sweet spot for credit spreads. You're going to get paid enough to make it worth it, but it's not too much risk, if that makes sense. It's not like, if you get a one-to-one risk to reward ratio on a credit spread, you're probably taking too much risk. So let's drop a box in here and see what this looks like. So 195, right around there by 190. And we're going to go all the way out to March. It's probably going to be right around there. That's what our bull put credit spread would look like in this case. The stock hasn't been below the 20-day since October. It's been a long time. And we are putting our short strike below the 50-day. So there's a lot that you can do here. If we took this trade, for example, and the stock did come and break the 20-day, you could just get out. It depends on what your management plan is. And we could do a whole hour or more on managing credit spreads. Actually, we could do a whole day on managing credit spreads. So we're not going to do that all right now. But this is just a potential to look at. And this is the power of credit spreads and good patterns. Okay, I'm not telling you get into this trade right now. If you have access to paper trading platform, on Charts by Treyway, for example, sure, why not paper trade it? Get the experience. If it goes against you, great, good too. You can learn more about that. You can see what that looks like, what that feels like, prepare you even better for when you're real trading. But this is a nice chart. And this is one of several different types of strategies that you could do on this chart. And this one offers still a fair bit of money for the risk and a pretty high probability. So probability of profit, they call that POP sometimes. So the probability of profit is pretty good there as well. So that could, of course, go on maybe a separate trigger list, right? I could go ahead and come down here, click the send button to select a watch list, and I could put it on my, I thought I had, yeah, there's a trigger list, right? So I might look at that at the end of the day and get in that trade if I want to do so. Dan, I haven't forgotten about you. I see you down there. I'm gonna get to you right there. SLB. So moving on down this list, and we're not going to do all of it. We're just going to do a couple here. You look at this guy, and ooh, all right, take a look at SLB. So this wasn't a nice uptrend, right? So it made that scan list. By the end of today, it may not be on that scan list anymore. Broke down from this uptrending, broke below the 50. Pretty ugly day for SLB. So this one, I might just get rid of. It's gone. It's out of my uptrending watch list because it just doesn't belong anymore. HCA, hey, that one's pretty decent. That could stay in there, probably a little bit extended. UBS, also uptrending, definitely extended, so on and so forth. You get the point, guys. So that's one of the ways that I like to go ahead and just process a watch list. And, you know, instead of having to do hours and hours of homework and looking around, use the platform to aid you. Use the platform to help you. Your homework for trading shouldn't have to be 2 hours every evening. It could be up to half an hour. That's it. That's all we're really needing to do. All right, Dan, STM, are they getting ready for a run up and possible calls? What's your take? I'm going to tell you right now, I have no idea what STM is about to do, but we can look and see what the pattern has been. Oh, wow. Okay. STM has already run up a lot. Okay. Are they getting for a run up? Possible calls? This guy, wow. Okay. So this is already extended quite a bit. Moved up even more on earnings. Massive gap up. There's that same strategy I mentioned at the beginning that Treyway teaches on gaps. And in this case, that strategy would have worked beautifully. I would not buy calls on STM right now. I'm glad you asked. I would not buy calls right now. Why? It is so far extended. I would not buy puts right now either because it's so far above the 5 EMA. There just isn't much we can do with this right now, right? Best case scenario, if this thing maybe floats down a little bit, retraces, and then puts in a nice bounce off the 5 EMA, you could maybe trade it off the 5 EMA. That's aggressive. It is aggressive, but it can be done. Keep a tight stop loss. If it were to then break down below the 5 EMA, boom, I'm out, right? That's my stop loss right there. But where it is right now, look, at some point it's got to rest, right? Just a few weeks ago, about a month ago, we're down at about $35 a share, and now we're up at 50. That's pretty big, almost 50% increase, almost, in a month. So big move there. It's just hard to do something when they really take off like that. All right, thanks, Dan. All right, last one we're going to look at. Jess is looking at FA for stock. Love it. Guys, options are great, but you know what? Stock trades, oftentimes underutilized and underrated. There's a lot of power in just a simple stock trade. For the mindset, the psychology, we could talk a whole day about that too. Can't do that right now. But simple stock trades can be great because if you take an expense, it's a small expense, right? You can still, you know, ride things up, but if it's an expense, it's a smaller expense. All right, so FA definitely broke this downtrending resistance line, even above the 200 simple. And so that's a pretty big move right there. The question I would have, Jess, is what is the pattern? Yeah, it broke out. It broke out. And we could throw a line on here if we want. That's a fairly steep line, and it's actually even extended from that. Now that it broke out and it's changing patterns, I would love to wait for this thing to get established in a new pattern. Once it's established in a new pattern, and that might be after earnings, right? Earnings coming up in about 3.5 weeks here, 4 weeks or so. By the time earnings is passed, that's when I might take another look at this guy and see, hey, is it in a good pattern? And if so, then I might look to trade it. Just because it broke out of this, you know, it wasn't the prettiest pattern, maybe like a descending wedge type of a pattern. Just because it did that doesn't mean I'm fully convinced that it's just ready to buy right now. So again, pretty patterns is what we want to prioritize. And this one seems like it might be changing patterns. So let's see if it can develop a pattern, how pretty it is, and then we can reevaluate maybe after earnings. That'd be my bet on that one. All right, Dan says STM has a large BTC. Is that Bitcoin holdings? STM, large Bitcoin holdings. Now, I haven't followed Bitcoin, and I've been pretty big the last couple of weeks. I don't know, maybe they've been moving up, but ooh, that's I don't know if I want to touch that one, but that's okay because we don't have time anyway to touch that one. We're already over time, but that's great, guys. Hey, so many good questions and good takers you guys threw in there. I want to give you guys a link in here, and that link is simply, if you sign up for this thing, it's a little worksheet essentially, right? And it's going to help you. It's 10 steps to choosing your first stock trade. It's going to help you choose the right kind of stocks, right? It's going to help you know when to buy them, and a big one of when to sell them. A lot of places out there, guys, they'll say, hey, go get in this, go get in that, buy this, buy that, right? They're telling you what to buy, and it might be a good time of when, but rarely do they ever help you in when do you sell. That is such a huge part of trading, guys. When do you sell? And we're talking about both the stop out and the profit target, right? When do you sell? So this document can help with that, can help you take your first steps as a stock trader. So check out that link. Both YouTube and Facebook should have that. Speaking of, if you got one of those like and subscribe buttons on YouTube, Facebook, go ahead and click those too. We'd love that. We really appreciate that. So guys, this has been a fun one, some great interaction. I'm glad to be back with you guys, and we'll see you next week. Thanks all.